Welcome to the Double Indemnity podcast. I'm your host, Toby Clegg, along with my co-host, Stuart Reid, and today we're thrilled to be joined by Peter Blanc, who's global head of M&A at Howden's. And I'm going to start by saying you have been introduced to me in the past as the James Bond of the insurance world, which worries me somewhat because it makes me think we're Goldfinger and Oddjob. I'm not sure which. Which one do you want?
I'll take Goldfinger.
Well, there we go. Okay. But no, welcome, Peter. Thanks you for joining us today. So we're really looking forward to this. So hand over to Stu.
Well, it's lovely to have you here, Peter. Thank you very much for coming. We've known each other for a long, long time, been friends as well as competitors. Let's start at the beginning. How did you get into insurance?
Complete and utter random luck, inevitably. Did my A-levels and we decided to get, my two friends and I decided to get a job for the summer, and we thought we'd earn more money if we pretended we wanted a proper job rather than just stacking shelves in Sainsbury's. So we put suits on and we went to Ipswich, the nearest big town, and we split up. My mate James went up the hill, I went down Princes Street, and Ian went off in another direction. Ian walked into what was Sun Alliance. He's now a pensions actuary. James walked into a small solicitors called Turner, Martin and Symes. He's now chief legal counsel for a big Swiss hedge fund, earning gazillions. I walked down the road. The first office I got to was Legal & General. Rang on the doorbell. It was obviously a slow news day. Asked to see the manager. Said I really wanted a career in insurance. And a couple of hours later, he offered me a job. $3,600 a year. Get in.
Hey.
Amazing.
Well done.
Amazing.
You know, taking a few minutes just to look back on your career, what would you say was the most enjoyable part?
Honestly, I've loved all of it, and hopefully still love some. I mean, if that sounds like I'm finishing. I still hopefully still got some more stuff to love. But I've always enjoyed actually the client side of things, and I remember you said to me years ago, you said, why are you doing all this client stuff? And you're saying, hey, when you're running a business, you can't be doing client stuff. But I've always enjoyed it, and your clients become your friends, and then actually so much of your social life actually revolves around your friends. Who are your clients, and so you get invited to all sorts of fantastic things. You get to invite your clients to lots of lovely things. You have a lovely life, and you get paid for it, which is, what's not to love.
Not so bad, not so bad. I guess from my own point of view, I looked at clients as being really the insurers, and we know where that led to. But yeah, I think also you've been very savvy, have you not, in the relationship with insurers, capacity providers, call it what you will. You've identified as just as important as the clients, without the terms, without the commissions, without the service levels.
Honestly, it's funny. I've always had, I love our insurer partners, and you realise it's got to, it just doesn't work. If insurers don't make money out of the relationship and don't have a good time, then it's kind of, it's going to be short-lived. But equally, I've had a really, personally, I've always struggled with underwriters, because if you ask any of my any of the team that look after my personal clients, they know that my favourite saying is, well, that's ridiculous. Normally after they said, oh, I've got terms for this client, and well, that's ridiculous. Go back to them. And I've always had this real challenge that actually it feels like a silly game sometimes, where the underwriters go for that much, we go for that much, and then eventually you end up where actually sensible people should have started off in the first place. But it's almost like we're hardwired, the underwriters are hardwired to go for unreasonable excesses, and then brokers are hardwired to go for ridiculously below the line.
Yes. And
then eventually you end up at the right level. But it does seem like an awful lot of work to get to something that's pretty logical.
Yeah.
Yeah. I guess the insurers are important, but it's a people business, but whether it's clients or it's insurers. And being here in EC3, EC4 has been a part of what you've done. But also on top of that, you've had signature success both at Biba and at the CII. Do you look back on those roles with fondness?
I mean, I've loved it, and I'm back with Biba on the Large Brokers Advisory Board again now. I mean, I've always enjoyed Biba. I think they do a phenomenal job for the sector.
Right. Yeah.
And any broker in the country should be a member of Biba. I mean, I just think they do a fantastic job, and it gives you great insight into what's actually going on with the regulator. Because I think it's easy as a broker, you see stuff coming across your desk, you see stuff online, and you react viscerally to it. Yep. But actually, talking to Biba makes you understand where the regulators are coming from. And they get that balance really well, where I think we can moan at Biba and then Biba turn it into something sensible to then go to the regulator with, which I think is really helpful.
Very true.
You studiously missed the CII.
The CII, I was just going to come on to that. CII, I've had a lovely time with them. But unfortunately, it was at the back end of COVID. So little did we know, because they worked sort of a couple of years in advance. So when I agreed I was going to become president, that was just before COVID. Little did we know the world was going to change. So of course, didn't get a dinner, didn't get many dinners. I mean, that was amazing. I was so looking forward to a fillet of beef or a bit of a. It just didn't happen, unfortunately, which was a real shame. It was felt like I was robbed slightly. Myself and Julie Page before me, we were both had a challenging couple of years as CII presidents.
And I think they've got their challenges now. We're all very supportive of them.
Put all our staff through it, yep.
Yeah,
absolutely.
but they've had some tough times. We all wish them very, very well to try and resolve that and get that.
Keeping relevant, I mean, it's just really, in this day and age, I think it's true for education generally. Yep. I mean, and I think of the CII as an educational body. And when I saw on the news the other day, the government are looking at changing the educational curriculum to teach children about AI and this, that, and the other, and they're going to roll it out in 3 years' time. 3 years? I mean,
be the new thing.
Exactly. Just get on with it.
The irony is they could use the AI to actually write the syllabus.
Well, exactly.
They could do that instantaneously.
That's the mad thing. But it's keep for the CII to stay relevant in a difficult and fast-changing world.
Absolutely.
But yeah, I wish them every success with it. But it's a tough gig.
Yeah. So moving on to your career, I mean, it is a demonstrably broken career at the start, and obviously you've bought and sold and done MBOs.
About 15 times.
About 15 times.
Yeah.
But some fabulous businesses. When you look at Lark, you look at Aston, you look at obviously, oh my God, there's too many to Knox Johnson, for instance. I just look at all these marquee names. How did you find them? And when you brought them in and you knew that you were going to make them part of a bigger whole, how did you keep them motivated? Because I'm still policyholder of some of them, incidentally, I hasten to add, and they're brilliant. Service is still great. So how have you managed to keep that going?
Well, the origination side, I mean, there's two sides to it. It's the origination, three sides, origination, execution, and then integration.
Yeah.
And they're all equally important. I mean, arguably, the integration bit is the most important bit, actually working out how they're going to fit. But crucially, I think working out how they're going to fit in advance, so that actually the deal is genuinely going to make sense. I mean, everyone uses the cliche now. It's got to be a cultural fit. There's got to be this. But really, it's just this mantra of 1 + 1 has got to equal 3. There's no point buying a business if you're just buying a business for multiple arbitrage or to chuck a bit more EBITDA in the pot before you then go and sell. It's just not very genuine. Whereas actually, if you buy a business, you think, well, if you come in, you can sell all your products to all of these clients over here, and actually we can get all of our brokers to place their business with you. Oh bloody hell! Actually, we could do a lot better, couldn't we? And if you genuinely go at it like that, then I think you can get some fantastic M&A, and that's we've literally just followed that mantra all the way through. And
you're doing that obviously for Howdens now on a global basis. That must be quite thrilling, because the UK market is somewhat, lack of opportunities, they kind of characterise it as. Is there just a lot more globally? I know people started to look obviously in Ireland, and then it went to Europe again. And
I mean, globally, it's amazing. In the EU, just talking about Europe, there's one common market, and in theory, we're supposed to be the sort of the outlier, and and yet every single European country is just wildly different, all at wildly different stages of maturity. There's different approaches to PE. Some countries absolutely hate private equity. Other countries are just characterised by brokers that just want to run their own business and live forever, and just carry on running their business and never want to sell. And then there are other countries where we've been able to several fantastic people in Howden have been able to unlock it. I mean, in Greece, we're the biggest broker in Greece now, bigger than Marsh, Aon, and Willis combined.
Wow.
And that's Dimitrios, who runs our Greek operation, kind of Mr. He is Mr. Greek Insurance. He knows everyone in the market. He's got a fabulous boat, inevitably, and he basically just lures people in with his personality, and then makes it work. And in each country, we've got operators of that sort of quality. And the one thing that we live and breathe by is, never thinking that we know it all in London and that we can just go off and buy stuff in Europe.
Yeah.
You know, we have our country leaders. You know, all of the country leaders in Europe reporting to Luigi Sterrani, who's a fantastic Italian guy, and each of the country leaders are in control of their country, and they choose what to buy. So our job is to kind of help them, prompt them, but also to help them get the deals over the line and get the structuring right, and make sure that if it's stuff that we've seen elsewhere, bring that experience to it. But generally, all I do is just constantly try and make 1 + 1 = 3.
I can imagine.
Yeah, I mean, taking you back on that, obviously I've had experience of acquisition too. And I guess from now looking at others, particularly because there are just the big brokers and the small brokers now, and there's very little in between, I would suggest that a significant minority of people working in the insurance broking industry probably are working for a company they didn't actually choose to work for.
Very important.
Good point.
Yeah. But it's that cause and effect, that, you know, the gap between cause and effect and access to people in senior positions is drawn longer.
Yeah.
How have you been so successful in coping with that change from a smaller world to the body corporate, the big world?
Look, I can't lie. I mean, that's a really difficult thing to pull off, and it's an increasingly difficult thing to pull off. Just simply because, you know, when you first start out on the acquisition journey, you know, the first broker I bought when I bought Aston Scott, the first broker I bought after buying Aston Scott was First Commercial in Burnham on Crouch in Essex. Good friend Mark Franklin, who's, you know, still with the business, fantastic guy. And, you know, during that first year, I was, you know, speaking to Mark every week, you know, all the time. And then, of course, the next year we go on to the next shiny things, and then you speak to Mark less and less. And now I speak to Mark maybe, and you feel guilty about it. You actually think, well, God, I only speak to Mark once every 6 months or so now. And that's a really tough thing to do. And imagine that multiplied by gazillions for David Howden, who has to try and keep not just all the UK guys happy, but we're in 55 countries around the world. And it's so difficult. And when you've only got so many hours in the day, and he does a phenomenal job of keeping everyone happy. But that's kind of the full-time job, keeping everyone happy, keeping everyone pointing in the same direction, working together.
But that's one of the successes of Howden's, I think, and please jump in if I'm wrong here, is unlike a kind of Aon or Marsh, and just picking some others as an example, they're obviously public companies and you do get shares and other bits, which is fine, but you can contribute so little to it, whereas there's actually a really good share ownership piece for staff. And that, like as you said, those acquisitions, it's very rare for people to stay in the business for too long. They usually cycle out, start again, as we're seeing quite a few fall out of some of these consolidators now, but it hasn't been the case with Howden's. They're kind of in for the journey. And
it is. And look, that's probably the biggest area of alignment between myself and Howden. And I'll tell you how it came about. When I sold my first business, FMW, to Oval in 2007, and at the last minute, Oval said, right, the only way we're going to do this deal is if you take 10% of your consideration in Oval shares. It was originally an all-cash deal. And then last minute, literally in the lawyer's office, back when people used to go to the lawyer's office.
There's a surprise.
It was, oh, sorry, guys, it's got to be...
All been there.
And I took 10% of my consideration in Oval shares.
Yeah.
And during the first year after selling, again, one of these lessons you learn, I absolutely hated the first year after selling my business. It just felt like everything Oval were doing was just designed to wind me up and annoy. It was awful.
Which they told me is exactly what they were doing.
You can see the play.
Had it not been for the fact that I had 10% of my consideration tied up in paper in that,
you'd have gone.
I would have gone.
Yeah, absolutely.
And I've used that ever since. That actually, whenever I buy a business, if you're buying a business from someone that is still of working age, and that's a very flexible thing now, you kind of, unless you're practically nearly 80, I consider you still to be working age. If we're buying your business, I absolutely want you to be on the journey. If I want you to be on the journey, you will take shares in the business. And it's hard, and it's lost us deals over time because some people just want to cash out. That's fine, but I know that with me, I would not have stayed with Oval had I not had that shareholding that sort of forced me to stay. Yeah. And I followed that mantra through. And you look forward in Howden now, one of the reasons we chose Howden was because it enabled all of the staff that we'd got into the equity in Aston Lark to roll into Howden stock. Sure. And that's then more than doubled in price since they rolled in. So it's... And 33% of the shares in Howden are in the hands of the management and staff.
Yeah.
When you compare that to Marsh, I think the figure is 1 point something %.
This is it.
It's a completely different ethos.
But it's a massive opportunity, isn't it, for those smaller brokers that want to move into that middle ground. That there are disenfranchised, I guess, employees working for companies they haven't chosen. For me, I think it's a fantastic time to own a smaller broker and, I guess, do what we did.
I think I can't disagree with that, Stuart, because I do think there will be people who just get left, who just aren't. One of the interesting things I think in life is that people that look after clients are often overlooked in broking businesses in some ways because they're not in the room.
Yeah.
People that look after clients who make no apology, they are the lifeblood. They are the most important part of any insurance broking business. I'll stand on my grave saying that. It's kind of the producers are the most important people.
Absolutely.
And they're out seeing clients. So when you have all these management meetings and so on, they're often not the guys in the room. The people in the room are the people who've got time to be in the room.
More financially orientated, and that's the problem.
And they're the ones making the decisions, and they're often quite remote from clients. And I think that's where a big problem lies with bigger corporate brokers, making sure that decisions are truly made by client-facing people, not just by people who never see a client.
That is true. That is very, very true. I mean, if you had to give some advice to those who are maybe younger brokers who are actually, they've started their own broker, they're looking at it, they're thinking, I'm not really sure about this M&A world, they've heard a lot about it, but I mean, you're, again, I use that term poster boy again, I might have to use that a second time today, but
Poster person,
I'm going to get that tattooed on my brain. Poster person for basically successful M&A and taking people with you. There are very few that can honestly say that, especially amongst some of the consolidators, as controversial as that is to say, because people do fall out. The stitched on parts fall off of the PE bandwagon at times because they're just not taken with them. You've managed to do this. So what would you say to people going from, as you started out like a motor broker, right? As people that, obviously, we did as well. I assume you did, didn't you? You've never written motor?
You've never written a cover note?
You haven't been part of the elite?
No. When I sold the cover note.
It's probably sold them. Still got some.
I've sold a few. No.
We've just lost all the young audience now. They've got no idea we're on.
No, I saw it. Forgive me for interrupting. I saw in the press yesterday that a broker's opened. I think it's in Bournemouth. Doing private lines.
Absolutely,
motor and household.
A new broker. Wow.
And this is the thing. So, if you can give them some heart, some hope. I mean, you went on that journey. There was nothing to suggest, if that's fair to say, to suggest that suddenly you would end up in this global position at the start of your career, other than being a thoroughly nice bloke and really good at your job and a great broker. What a journey. And what would you say to them? How would you give them the heart that actually this journey is open to all? It's not just going to be, no offence, a Howden-dominated world or the big boys and girls. It's going to be...
Far from it.
No, it's going to actually be a more segmented one, potentially.
Well, I mean, look, broking, as Stuart said earlier on, I mean, it is absolutely a people business. It always will be a people business, particularly in the commercial world. I do think, there are challenges at the personal lines end.
Oh, yeah.
To actually, if you're in the private client or the bespoke end or the non-standard, absolutely, there's still going to be space for brokers. But I think in the commercial world, it's hard to see how that gets replaced, how a broker gets replaced in the medium term anyway. So I think that should give them plenty of heart that they're in the right business, they're in the right industry.
Yeah.
And then when it comes to growing, their competition have all of the big brokers have all got onto the bandwagon of demanding more and more and more from the market.
Yeah.
And the market has had to pay it because they've had, but that means that there's so much fat in that system that a broker could comfortably undercut and still make a fantastic living.
Yeah.
And the trick is going to be getting the initial scale to then go and take on the debt. When I sold my first business, I proudly said, we've got absolutely no debt in the business. I was an idiot. I mean, I should have had debt in the business because that would have helped us to scale up.
Yeah.
And when you're in an industry which has really, really strong margins, then not taking on debt is crazy. It's absolutely crazy. It's like, why wouldn't you buy an asset at today's price that's going to go up?
No, very good point.
So I think getting the initial scale is a tricky bit, but that initial scale, that original hurdle, if you like, to become a consolidator or to actually get good debt deals is pretty low now.
Yeah.
I think you only have to, if you've got £5 million worth of brokerage income, you would be big enough now to get decent debt terms and to start to do that journey.
Probably in the top 100 brokers at that size.
Yeah.
But there are things that mitigate it, aren't there? There's the network offerings, and some of them are very good.
Yep.
And that helps you with regulation, which I was looking into the other day, not for me, obviously, but for starting up a broker, what you hopes you have to go through with the regulator, and it's pretty heavy stuff.
Yeah, absolutely.
So being part of a network, and then obviously the insurance companies themselves have networks, don't they? What was the Aviva one, 150 Club or some such?
Yep.
You get in on that, and then you meet people who are having the same challenges as you. It's about people.
Absolutely.
It's about
and if you find there will be, there's a real challenge with growth. Don't get me wrong, it's really difficult. That first bit, if you've got 4 or 5 producers who've clubbed together and formed a broker, once those 4 or 5 producers have each brought in 5, 6, 7, 800,000 pounds worth of brokerage, they're pretty well tapped out.
Yeah.
And at that point, the business, if it's making 3 or 4 million of brokerage income and throwing off £500,000 of net profit a year, they will get very, very used to sharing out that £500,000 worth of net profit each year.
Sure.
So when someone says to them, okay, to grow, you're going to have to actually reinvest that. That then becomes a very, very difficult conversation. People don't like going backwards financially. They don't like taking that risk. That's probably the biggest initial challenge. Once you've got to a certain scale and you can get external debt and you can use other people's money to grow, it becomes so much easier.
Yeah, and also I think the specialism, coming back to the specialism, I absolutely get you. You're tapped out at whatever level your sort of 3 or 4 introducers are, or your partners, etc. But dive into it. There'll be a specialism in that book.
Yeah.
Dive into it. Be the expert. Employ someone who actually does it at the weekends, whatever it might be. And it's the specialisms where high value comes from, because you have to be a specialist to do it.
And the referrals that naturally you get from them organically. That is, it's the unspoken thing is sometimes is the marketing element of insurance. It's something I've been looking into recently. You just think the power of those B2B relationships. Effectively, that's where some of the bigger players that obviously you're knocking on the door with, not overtaking in some places like Aon and others, they're not actually advertising much. They're just relying on those B2B networks, and it's genuinely brilliant when you think about how they do it.
I was referred into a single vehicle car transportation business back in, God knows, it must have been late 90s, I guess.
Yeah.
And picked up this car, and it was down in Yeovil, and he referred me into one of his mates who was also in Somerset.
Yep.
And then he referred me into one of his mates in Bristol. He referred me to one of his mates in, and literally, and we still today insure 80% of the UK's car transporters.
Wow.
Yeah. That's amazing.
Just from, it's always a two-edged sword, because you look after people who get referred.
Yep.
You have to keep looking after people.
No, absolutely.
Drop the ball, and the bad news travels just as quickly. So it's kind
even
of
quicker, probably.
Even quicker, probably. But that specialism point is very, very well made.
Yeah. And that's MGA, that's broking or whatever.
Yeah, absolutely. Do you think there's a lot of... Actually, it's a good question, actually, that stem from that is... Now that obviously Howden's is demonstrably a broker, we know that, but obviously the MGA world represents some pretty juicy opportunities and some fun and games out there. So do you see that as quite a growth market for what you're targeting at the moment? Would you say it's more than broking now, traditionally?
The private equity community are really, really excited about MGAs, My slight concern is that the reason they're super excited about MGAs is because practically every MGA you look at has had a stellar 5 years.
Yes.
So their chart, let's
by valuation as by income.
And hardened market. And
it's literally hard market, claims inflation, premium inflation. So they've all got graphs that look like this.
Yeah.
And the private equity world just extrapolate that to the future. God, it's going to be gazillions. And of course, those of us who are old enough and ugly enough to realise that the market goes down as well as up, realise that, And the trouble with buying an MGA, it's like buying a broker with one bloody great client.
Yeah, good point. That's a good way of looking at it, actually,
Now, if I were buying a broker that had a reliance on 1, 2, 3, 4 clients, I'd be really, really concerned, and I wouldn't be paying the multiples that are being paid for MGAs.
Absolutely.
Because they're only ever one bad year away from losing their capacity.
With 3 months' notice.
Absolutely. They lose their capacity, and then, honestly, trying to go around the market to get new capacity.
Yeah.
When you say, right, here's my track record of a disastrous loss. Would you like a slice of that? It's really tough. MGAs disappear off the face of the earth when it goes wrong.
They do. And one of the interesting things I always thought, and it is, it's gone on for many years, but it's the underwriters that don't actually have to live up to their losses at times, but the individuals I'm talking about, where they've come in with a great gusto, saying, "Oh, we're going to take over the world, and I'm a brilliant subject matter expert in this particular line." They write a load of, well, I'm allowed to swear, crap or whatever, and then by the time they come onto roost, of course, they've moved on. They're reselling the same story, and in a way, that's one of the difficulties. Is there's so much M&A that's happened, but actually, no one's really focused what you said earlier on the individuals, the actual producers, because they can move on. They're the cheaper bit to hire, really.
Absolutely. In Howden, we have one of the largest MGAs in the world in Dual.
Yeah.
And it was really interesting. Last year we bought 62 businesses globally.
Oh, wow.
But only one of them was an MGA.
Yeah. Oh, that's interesting. Okay.
Just harvest your own.
And it's because Dual are super fussy on underwriting quality, and it's a really difficult. But
that's why they never give us any terms
through the cycle.
That's the problem. Right, we'll get to the final question. We always ask our guests. So there's something, an opinion piece you could leave us with, a kind of even a controversial thought that would allow our listeners and viewers to go away and think, oh, okay, make me think.
Well, I'm hoping that the next few years we finally crack. We're all consumers, aren't we? We're all consumers of insurance, and we sell insurance, and we think we know what we're selling. But it's only when you go on the other side of the fence and you actually consume insurance, you realise how diabolically awful the experience is for most customers.
Yep.
And it's that. I just think, we've got to wake up to the fact that Amazon have been so incredibly successful, not just by doing what they do, but by making it idiot-proof and so easy and
Putting the customer's hat on. Yeah.
Absolutely, and it's like, it still amazes me that we deal with insurance businesses where, oh, can I pay on Apple Pay? Oh. No. We're going to send you an invoice through the post.
Yes. Yeah.
God's sake.
And it's seen as a great advance, isn't it, to say, well, we're going to send everybody the documentation electronically, and you get this email, and there's 42 attachments.
Which one do you look at? Yeah, I know.
Honestly, and it's that diabolical service level that we should collectively be slightly ashamed of ourselves, given the margins that are made in the insurance sector.
Yeah.
That's if we were making wafer-thin margins and there was no money for reinvestment, I could just about buy it.
Yeah.
But the margins that we make in the insurance sector, if we can't get customer service right so that actually it's a pleasant experience, then shame on us. Yeah. That's what we should be focusing on.
Here.
Really good point.
Here.
Well, Peter, a huge thank you for coming in today. So it's been an absolute privilege to have you here. Hugely enjoyed that conversation.
Yeah, very, very good. Thank you very much.
Wish you all the success, and obviously jetting around the world, we're thoroughly jealous as we're stuck in the UK. So enjoy. But obviously, a big thank you to our listeners and viewers, and we'll see you next time.
Fantastic. Thanks, guys.
Thanks. Cheers.